This is going to be a follow-up on one of the most important videos that I will ever make. If you didn't catch the previous video on the XRP Domino Theory, I'm going to put it up here for you guys. Without further ado, let's get into what has changed since that original video was put out. So in the original video, we talked about 5 different dominoes. So there was Japan, stablecoin regulation, Tether, Bitcoin, and the US stock market. In this video, I'm going to expound on some of those pieces, tell you about some of the things that have happened since then that change things. The ultimate consequence really doesn't change. Maybe how it takes place has some differences from the original video. So since then, Japan has not dumped US Treasuries. They have burnt through a big portion of their slush fund of US dollars, holding down erosion of the yen against the US dollar. And this is why this is important. So the reverse carry trade is pretty exceptional over there in Japan. And I kind of talked about it in the original video, but people actually borrow they borrow the yen. And when they do that, they borrow that at like 1% interest right now. For decades, again, Japan had negative interest rates, so you actually got paid to borrow money. And then you would go put that to work somewhere else, often in US Treasuries, because it was a stable yield. You knew that it was reliable. It's a tier 1 asset. And so right now, people have a large amount of money borrowed in the yen against their treasuries at 1%. And then they take that capital and then they go buy US Treasuries and they get a 5% yield. And so if the yen appreciates against the US dollar, that doesn't bode so well for those people. It becomes more and more expensive for those that have borrowed the yen and are using the reverse carry trade to make money to pay that back. Right now, we're back down to 157 yen to 1 US dollar. Just a week ago, we were up as high as 161. So again, Japan selling US dollars to buy yen to strengthen the yen versus the USD, but it's really in a doom loop at this point, because if they do make the yen strong enough that it benefits their economy, again, they're going to have a lot of defaults to pay back to loans. So they have to find some way to be able to get out of this situation. And again, in the original video, we talked about CBDCs and how they can incentivize people to hold their own treasuries and buy those versus the US denominated treasuries, and why they would eventually end up dumping treasuries onto the market. And I still think that that's going to happen. And when it does, the way that I think the original video we talked about, really just a lot of turbulence and problems in the treasury market and what that would cause globally, but we really never came to a conclusion on how that would be stabilized. And the way that I think the US will move to stabilize the treasury market when this occurs is they're going to run through stablecoin regulation. And in that stablecoin regulation, it requires financial institutions or enterprises or anybody issuing a stablecoin to back that one-to-one with cash or cash equivalents. US Treasuries definitely qualify for that. And so domestically, I think that there'll be a lot of demand when they move that regulation through for people to get to market for their stablecoins. Ripple has come out and said that they are going to launch Real USD or RL USD on the XRPL. And so that would provide a stable way for people to hold dollar-denominated assets in a currency on the XRPL and trade in and out of whatever else is going to be tokenized on the XRPL. Real-world financial products, XRP itself. But I think Ripple's model is really just a kind of a how-to guide on what to go about and what to do in order to be able to issue a stablecoin on the XRPL. It's a private stablecoin. Obviously, you'd have to trust Ripple and their auditing and that they're holding the backing in a 1-to-1 ratio like would be required for the stablecoin regulation. Now, we talked about Tether and the implications for Tether if there were instability in the treasury market. And I don't think Tether would collapse. Obviously, that collateral would be bad, and the US dollar isn't going anywhere. Treasuries aren't going anywhere. I don't think they're going to let that happen. Again, like I mentioned before, I think they have contingency plans to be able to drive demand to soak up that debt as it is dumped by those international parties when that inevitably happens. So Tether's facing other headwinds, though. And in the original video, I didn't really talk about this, but Since then, there's been a lot of things that have led me to believe that Tether ends up being sanctioned. There are transactions that are happening on that network to sanctioned countries, either Russia or Iran. It's a dollar-denominated stablecoin. It's backed by U.S. Treasuries. We do not need stablecoin regulation for the U.S. government to go ahead and sanction Tether, even though I'm going to talk about why I think they'll probably wait until after. So we did just get clarity for Binance and Paxos and their stablecoin. It's not a security. It's not any issues. When we did talk to some of the other parties overseas when I was traveling earlier this year, they did mention that Paxos was good and that they were fine to work with that, as well as USDC, but everybody else had de-risked from Tether at that point and have become aware that certain people that do transact with Tether here domestically have been subpoenaed for information. And so again, just more compounding things that lead me to believe that Tether does likely end up getting sanctioned. And when they do, if it's after stablecoin regulation, if they wanted to get compliant, they're going to have to, basically Tether would be frozen until they could get compliant. And that has huge implications for the broader crypto market. But one of the things that they would have to do would be shore up their backing, again, with cash or cash equivalents. A portion of Tether is backed with Bitcoin. And right now they hold 75,354 Bitcoin with a current value of around $4.4 billion that they would have to liquidate onto the market for cash, again, or cash equivalents, and buy more treasuries. That has huge implications for Bitcoin, and that could be a headwind. If you did see liquidity dry up in the exchanges, people would be looking for ways to be able to move value. Bitcoin is the most liquid asset currently, but if you had people dumping Bitcoin at the same time that Tether was sanctioned, Tether included, it doesn't bode well for that asset. And again, we talked about this before, why that might happen in the other video. But again, that causes some other ripple effects, no pun intended, through traditional stock market and the ETFs and the other things that have been launched for institutions to be holding Bitcoin. You've also got Ethereum. Obviously, it's the second largest market cap, even beyond Tether. Right now, since the original video, we've had lawsuit filed against Consensus and MetaMask for being an unregistered broker-dealer. They've currently made around $250 million for the transactions and trades on that platform. The SEC did launch a securities investigation against Consensus. At the end of that investigation, they did decide to go ahead and sue them. So they feel that they have a strong enough case to be able to come after them and state that they've been, trading without a broker-dealer license, digital asset securities on their platform. Does that mean Ethereum itself is a security? Not necessarily. Every time the SEC's been asked that specific question, they won't answer it. They did state, Bill Hinman did state that they felt at the time, and again, this has kind of come to light, this was his opinion and not the opinion of the agency, that Ethereum was decentralized enough to no longer be a security. But that was, again, when it was proof of work. It's now migrated to proof of stake. I've said many times, I think that things that are, traditional proof of stake, where you're actually giving up that item to somebody else and expecting compensation in return or appreciation or ROI is an actual security offering. But, we'll see what actually plays out there. I'm just explaining some of the headwinds that exist for Bitcoin and for Ethereum, and why I feel like liquidity is not going to move into either one of those assets if Tether were to be sanctioned. You have to get compliant with stablecoin regulation. So one of the other things that I didn't mention about Tether that I did want to touch on is that the micro-regulation in the EU has removed the capability to transact with Tether there. There's been a lot of exchanges that have delisted pairs with Tether. People are becoming well aware that, Tether FUD has been around for forever. So just take it with a grain of salt. It's coming, though. I'm seeing that Domino in particular has a lot of evidence that is going to be something that happens when all of this shakes out. So what happens to the exchanges, though, right? Like I mentioned, would the liquidity move into Bitcoin, Ethereum? Well, aside from the headwinds that I mentioned, there's high latency, those networks. It takes a while for those to settle. And the more volume that happens on those networks, the more expensive it becomes to send transactions. So that's not really that lucrative for the exchanges to be able to move liquidity through those assets, it actually becomes very expensive, and the throughput on those networks is not scalable, and it wouldn't work for the amount of volume on the exchanges, especially if there was a catalyst and people needed to get out of the market and wanted to swap and trade and move their stuff. It's just going to be a nightmare for either one of those assets to be the intermediary or the liquidity for those transactions. So, Sol might be another option that people would consider. That network does go down frequently. We have an ETF that's potentially being launched for that, and for Ethereum. Ethereum's supposed to happen this week. It was supposed to happen last week. But again, with the lawsuit between the SEC and Consensus, we'll see if they approve the S1s for Ethereum to actually launch, the ETFs for Ethereum to actually launch. Sol, Solana, it's going to be a while before those ETFs get launched. You could potentially use that as some liquidity. It is in the top 10 market caps. Would a lot of it move there? There's a potential, but again, if too much volume on that network, it's not necessarily scalable either because the network may go down. That being said, there is an actual theory. This could transpire at some point in the future, and this was put out years ago. It's called the Ellis theory. Google it. Really what it comes down to is supply and demand for XRP. And in this scenario, there's liquidity crisis across the exchanges, and because of that, you would see huge buy orders put in for XRP, which would drive price up and provide liquidity in those ecosystems. And he speculated that it could go to $589. How does the math work out on that? Your guess is as good as mine, but that makes a lot of sense to me. If you look at, there's there are 2 to 3 billion XRP left on the exchanges in the OTC market. So if there was a big mad dash to pick all of that up, either by institutions or the exchanges themselves to be able to operate, you could see price move up very quickly. And there would be liquidity shortage or a very high demand and not so much on the supply side for XRP, which would lead to a significantly higher price. Potentially one way that the price could be driven up to be able to provide solutions in this circumstances that I've discussed again in the original Domino Theory video and this one. The other way that I think is plausible, and again, take it with a grain of salt, like everything I say, nothing here is financial advice, only for entertainment, educational purposes only. Interestingly enough, before the Bitcoin ETFs were approved, there was a filing last year for an XRP ETF by BlackRock. And they kind of swept it under the rug. They said the DOJ was investigating, that it wasn't real, but that infrastructure is still there. It's no longer on the website, but there was entities formed and things done and things were filed for the trust and the iShares XRP ETF. So let's say there's a liquidity crisis. You need liquidity to move into XRP very quickly. BlackRock could use the infrastructure that's currently sat there that somebody else filed for them. And you would have to get an S1 filed with the SEC, and they would have to approve it. But they might do that, especially if we did have congressional clarity around a bridge currency and XRP, like I mentioned earlier, for the stablecoin regulation. That's one of the things that's listed in the stablecoin regulation is it denotes, what a bridge currency or bridge asset would be, and XRP meets all those qualifications. Just so happens. So I think that it's plausible that the BlackRock could use that, falsely filed ETF structure and rush things through to be able to move liquidity from potentially the Bitcoin ETFs or other things into the XRP ETF, buy a bunch of it off the open market, drive the price up, provide liquidity in this circumstance. And again, they're just saving their own tail, because if we have these dominoes falling, there's going to be significant losses in Bitcoin, right? And so they're going to have unrealized losses. Bitcoin itself settles almost real time, whereas the stock market is still T+1. They did migrate to that on May 28th of this year, but it's still not RTGS, or real-time gross settlement. It's not T+0. So in order for them to be able to mitigate those losses and make sure they're not having to pull from traditional stock positions and cause a snowball effect in the rest of the market, like we talked about in the previous video, they're going to have to implement something that allows them to settle real time and offload the Bitcoin and make that exchange between the brokerages and themselves and Bitcoin that they're selling. So they need an OTC desk, or if they're going to dump it on the open market, that could have huge implications for Bitcoin's price, again, driving it even lower. Not good. Not a good scenario. And if they don't do that, again, they're going to have to sell positions in the broader stock market to be able to cover the losses that they'll be experiencing and won't be able to recover in the Bitcoin spot ETFs that they hold. So with that, we'll go ahead and get into current market conditions and what that looks like. Is that possible? Can it happen? Last Friday, I guess it was Thursday, we started to see a rotation from large cap stocks into the lower cap stocks on the Russell 2000, something that we've been looking for. The Dow has made a new all-time high. The S&P 500 has hit the S&P 500 has hit new all-time highs, but the Russell has been trending sideways. The larger breadth in the stock market just hasn't been there. There's been a concentration in Nvidia and Amazon and Apple and Google and a lot of the larger stocks, and people have kind of, it's almost like a risk-off trade in the traditional stock market to move into those equities. But we've seen last Friday the most open call options on the Russell IWT in recent history. So somebody knows something that Brett's about to open up the market. We also saw gold hit a new all-time high on Friday last week. That's a risk-off trade. So people are looking for a hedge. They're looking to move out of stocks and into something safe. Traditionally, that would be Treasuries. But if you're looking at the reverse carry trade with Japan and worried about instability in the Treasury market from them dumping Treasuries, you're going to be looking for alpha in other places. And so instead of going traditionally risk-off completely with bonds and Treasuries, you would stay risk-on, but you would look for undervalued assets. So the broader stock market in the Russell 2000 makes a lot of sense. It would also make sense to move, rotate from Bitcoin, Ethereum into altcoins, which coincides with, some of the things that we're seeing on the charts as well. So all that to say, they're still going to need to be able to settle real time. If there is a significant downturn in Bitcoin, to be able to recover those losses so that they don't have to sell off stocks and cause further collapse. We are going to see some downside in the S&P 500 or the Dow, and it could also be the excuse to do so if that were to take place. I think it would be short-lived and things would rebound quickly, but it's definitely going to be a scary instance if that takes place. So, in the first video, I also talked about Project Ion and the DTCC and what they've been developing. I'm still really confident that that's actually what ends up taking place. R3 Corda and the DTCC have a product, Project Ion, that's running in tandem with the traditional clearinghouse. It can settle, on average, it settles 100,000 trades a day. It can go up to, 160,000 trades a day. That's completely doable with the system that they built. And if you needed to use a settlement mechanism that had clarity from stablecoin regulations, XRP is an excellent choice for that, especially if there was enough liquidity in the asset from, the exchanges either purchasing that and driving price up, or a BlackRock ETF moving a lot of liquidity in there. And again, this is just the things that I'm seeing in the broader market, macroeconomics, and I'm piecing this stuff together based on the information that I have. If you've got other data, please put it in the comments below. I would love to hear it. But I do want to wrap up here with, some of the qualifiers and what actually needs to take place. Are things in place for this to actually happen? Were they in place in Q1 for it to happen? And I would argue, not really. When I put out the original video, one of the main pieces here that I didn't discuss earlier, well, two of them, digital identity, and you need custody, and then you also need oracles. Well, the XRPL and the mainnet don't have that native to the network. Digital identity and oracles are on the docket here. Standard custody has since been acquired by Ripple. Medico is Ripple's custody solution, which also is used with HSBC. And that was the thing that was going live in Japan at the end of Q1 in March. After I made the original video, that has gone live. They do have tokenized gold. But I think Medico and Ripple's custody solution may be the missing piece here, especially for Japan. They definitely, you're going to have to be able to transact and hold CBDCs and XRP within their banking system to be able to adopt it and, save themselves basically from the doom loop that they're currently in. But aside from that, for the back end of the stock market, there's other considerations there, right? So you have to have a custody solution that holds those tokenized equities. If things are already running in tandem, then that solution already exists for R3 Corda and Project Ion. Funny enough, digital identity and oracles have also been solved by Corda, whose main investors were the investment banks early on. The other thing I wanted to point out here, though, is Corda in and of itself obviously solves a lot of problems, and its primary settlement mechanism would be XRP. It can settle through XDC as well. Other people, have found information on that, but they're going to use whatever asset has legal clarity and also enough liquidity to be able to settle those transactions. So as soon as XDC is $10 or $15 and has legal clarity, cool, might be willing to use that. But until that's the case, I don't see that playing out that way. And the last thing I wanted to mention is the DTCC did acquire Securrency last year, late in 2023, and they did not use Corda as their smart contract protocol. However, to be interoperable with JP Morgan and all the stuff that they've built, I think Securrency was the play there to be able to do that. And they were able to tokenize assets on Hyperledger and things that would be compatible with the EVM. So, enough time has passed now. It's been almost a year since that acquisition took place. And I think that the integrations between those three networks, Corda, Hyperledger, the EVM, Cactus protocol is something that I've seen that actually does that. And so all that to say, I feel like, even though these amendments haven't been passed specifically on the mainnet of the XRPL ledger, the XRP ledger, Corda and R3 and Project Ion, they're ready. They're ready. They're in place. They would be able to use this. They just need enough liquidity in their primary settlement mechanism or asset to be able to support instant settlement for the stock market or real-time growth settlement for the stock market to be able to save the day instead of us having, a significant stock crash and all the problems that I'm talking about here. So let me know what you think. I just wanted to give you guys an update. Again, a lot of time had passed since the original video. A lot of people seem to resonate with that. And again, let me know in the comments below. Do you agree? Is there stuff that I'm missing? I'm always on the hunt for more data, but I think that this is likely going to play out again here in 2024 at some point. And I'm really watching for Japan to start offloading treasuries. So with that, thanks for watching. Please like, subscribe, and we will see you on the next one.